What are the investment trends in agriculture in 2025? That's what we're talking about. Where's the money going and what is it doing in 2025? This episode of The Business of Agriculture. Are you looking for productive efficiencies and growing higher yielding, better performing crops? New Fields Ag provides a complete portfolio of biological products focused on you, the farmer. Visit newfieldsag.com for more information to help you farm better. Hey there, welcome to another fantastic episode of The Business of Agriculture. I got a great one for you today because they're always great ones. We talk about the business of agriculture, and business means money. Where is the money going? Where is it coming from? What is it hoping to do? I've got Dan Zelazik. He is with Ascendant Partners. Ascendant Partners is I guess I'd call them an investment advisory group, a boutique investment bank specializing in food and agriculture is what the actual write-up says. And Dan's a listener of my show, and he sent me a thing, and he's like, I'd like to talk to you about where investment in agriculture is going. And we covered this in different times, but it varies. It moves as the marketplace moves. And sometimes there's money pouring into one section and one part and one little area. And we're going to talk about what this is coming in and what it's doing. We're talking about food and beverage and agriculture. And we're talking with Dan Zelazik of Ascendant Partners. First off, thanks for being here.
Great to be here.
When we talk about investment, I think for the person that says, okay, I get a little overwhelmed. I invest in my retirement, my IRA, and I look at my checkbook, but beyond that, this stuff gets a little over my head. I think that finance uses some terms that are a little bit almost difficult. I think that they do it so that blue-collar kids like you and I are intimidated to enter the industry. And the reality is, I remember somebody, after like the ninth time someone said mezzanine financing, I said, hey, I got to be honest, I know what a mezzanine is. It's the second level up. I said, what the hell does that mean? They said, and that was an investment banker friend of mine. He says, Damian, half of the vernacular that is used in this industry doesn't really mean that much. It's just a bunch of terms we throw around. So anyway, let's talk about the terminology, then we get into it.
Sounds great. Yeah, that's a great jumping off point. I think, defining the types of capital is probably a good place to start. So, at the very top level, you have equity and you have debt. Equity is not going to have any recourse, but you're able to have claim to the profits of the business, whereas debt is collateralized by the assets of the business, meaning you have claim to the assets in bankruptcy or in a downturn within the company. So investors.
Hey, by the way, you're when you moved up a little bit, it sounded louder. So stay where you are right there from the standpoint of your voice. So from the standpoint of right there, if I've got $1 million to deploy into something, I can loan you money. I can loan you the $1 million, and then it's a debt, as you said, just like anybody going and getting a mortgage or a car loan. And then it's collateralized, as you said. It's a pledge to pay back this debt at a certain interest rate and collateralized against whatever I pledged up there, the company, my property, my daughter, whatever. That was being a little slide there. By the way, Dan's got a new baby, 4 weeks old. Boy or girl?
The boy. Good.
Good for you. Congratulations. Okay. We still recognize gender here at the Business of Agriculture. We still think that there are two. And my sponsors are fine with me saying that. Okay. Then, of course, there's equity, which means I'm giving you $1 million, and now I have a share of the company. And this is the most easily example is you own stock. If you own stock or a mutual fund, a mutual fund is just a collection of stocks. I own a portion of your company. I participate in the profits and the losses as equity. So, as you said, there's debt and there's equity. So, and I like to just go through the basics before we get into all the other stuff. Continue, please.
Absolutely. So then within equity, if you're talking about specific investors within agriculture or just the broader business space in general, you have venture capital and private equity, and they both have different risk profiles, different entry investments depending on the business life cycle. So venture capital, for example, is looking for those disruptive technologies or disruptive businesses that can produce outsized returns through significant growth and market expansion. Whereas a private equity firm is looking more towards mature businesses, for the most part, stable cash flows in industries that can see margin expansion, where there's pricing power, or just growth opportunities. And then so that's on the equity side, and then obviously on the debt side.
Real quickly to the person that says, "Okay, I really appreciate the tutorial here, Damian," because a lot of people are, this is a little overwhelming. It's not. We can simplify it all. If I'm venture capital pours into stuff that truly is more venture, it's a little bit more. They're expecting it's home run hitters. It's kind of a home run hitter idea. I'm gonna plow money into this thing that might be crazy. They're gonna take a big chunk of the return because it tends to be into riskier ventures and bigger chunk. Because remember, if you are a company that has been funded by venture capital, you might refer to them as vulture capital, because the idea is they'll fund you, but they're going to take like a third.
Yes, and that's how they make their returns, right? Venture capital, they can invest in five different businesses, and the return potential is there that three of those businesses can fold, and they still have the opportunity to realize the returns that they need.
Off the two that make it.
Exactly. Where private equity is different. They're investing in mature businesses, and you can't strike out on many of those.
Yes,
Especially,
you get lower returns, but a more stable environment. And so, Ascendant Partners, the company that you're going to be a partner in here in another year or so, you are a boutique in food and beverage and agriculture, and you are not doing. First off, you don't do the money. You advise those with money, correct?
that's correct. So companies that are looking for capital, if it's debt, if it's equity, and then also if they're looking to acquire a business or they're looking to sell their business, maybe going through some generation planning or transitioning, we'll advise on both the buy and sell side as well as capital raising activities.
So, Dan, your job is to bring them together. Do you advise the company that needs the money or wants to get sold or wants to merge, or do you need, or is that the part of your job or are you out beating the street to raise money?
We are out beating the street to raise money for our clients and or find businesses for them to purchase or buyers that are willing to purchase their business.
Understood. So on a daily basis, besides the hour you're going to spend with me here doing our prep and our recording of this show, what's the rest of your day look like? You're going to be on the phone a lot. Do you probably have certain funds already in place that are kind of Dan's friends that they call and say, you know what, we just got an infusion of $5 million. We're looking to deploy it. And you say, I've got just a place to go with that. Is that kind of what your day looks like? And then you call a couple of companies and say, you know, that expansion you're talking about, that new facility you want to build, I got you funded. Is that how it works?
Kind of. A lot of our clients are family-run businesses within the ag space, food and ag space. So a lot of time is spent working with them, developing strategies. If it's expansion, if it's passing down to a new generation. So, for example, we're working with a company right now. It's a crop residue company where after a farmer has their principal harvest, this company comes in, harvests the remaining organic matter known as crop residue, corn stover, wheat straw, things like that, and they're looking to acquire another business. So we're out trying to raise capital for them, both on the debt and on the equity side, so that they have the necessary funds to complete their acquisition and execute upon their growth strategy.
So Dan, the person who's listening to this just is going to like say, well, wait a minute, what's this company do with that crop residue, that remainder corn stover or wheat stubble, as it were in this case? And by the way, if you're listening and you're not in the Midwest, where Dan and I are from, you could say, well, what about the soybean? There's almost no residue to a soybean crop after the beans are taken away, so there's nothing really to harvest. But corn stover, there's a great deal of biomass. Now, when you remove that, you also remove nutrients and organic matter, which then you got to address with the fertility, but it's a byproduct. And when corn is being produced just a little bit, the cost of production is just a little bit below the price of the bushel, this is a chance to make revenue. Where's this company located? What do they do with the biomass?
So they're located in Oregon, in Northeast Oregon. They take the residue and sell it predominantly into the livestock industry, so dairies, feedlots, as well as mushroom production. All mushrooms are grown on a bed of wheat straw, as well as the renewable natural gas industry. So think digesters.
Yeah.
Crop residue is used as a feedstock within renewable natural gas production. So that's the majority of their customers.
So this company is a client of yours, and your job is to now, well, keep them as a client. And to keep them as a client, you got to help them continue to make money. And one of the things they want to do now is they want to expand. Are they expanding into the same space, just different geography, or are they expanding into a different space?
So this company is all across the U.S. They move their equipment to match the harvest and growing seasons so that they're optimizing their asset utilization.
So they're headquartered in Oregon, but it's very likely that come October there will be some of their equipment and ongoing business happening in Illinois.
Exactly. Think Texas, the High Plains, all the way to North Carolina, and then back up to the Midwest and Upper Midwest, then back down to the Panhandle area, moving the tractors and balers along with the harvest seasons.
So what do they just because if you're allowed to say they want how much money and how do they want to deploy it?
So the can't really speak to the size, but they are going to deploy it through they want to acquire another business.
Okay. They've already got their in contact. I mean, it's not like a surprise. They're looking to buy this and they just need the financing to make it happen.
That's correct. Yep.
And they don't probably need venture capital type money because presumably, as you described it, they've already got an ongoing business. They've got revenue. They've got actual net profit. They're not a venture. They are a proven entity. So that's why it's a company like you helping them find the private equity investment.
Yep, that's exactly correct. The company was founded in the late 90s. They've grown significantly since then, but have stable margins, are sizable in nature, and there is growth opportunities, which makes it slightly more attractive from a private equity standpoint, and likely, as you mentioned, wouldn't be applicable to a venture capital firm.
So why doesn't biomass company just go to the bank? Why don't they just go there and say, we want to buy this other company and it fits with what we do. We know how to run these kinds of things. We need X amount of money.
Yeah. So even within debt. So typically speaking, banks are going to be providing debt unless they have, a division that also provides some type of preferred or equity solution. There's certain requirements. If it's covenants, there's certain leverage, meaning total debt. So there's a capacity issue, which you can only have so much debt. Where equity is more flexible. You can have as much equity, inject as much equity into a company as necessary, and I think you see that quite a bit within the venture space, where these small, oftentimes non-revenue generating companies are raising hundreds of millions of dollars. So there's a limitation of how much debt you can.
Yeah, so a bank says just like I can loan you 80% against of loan to equity ratio or whatever that should be, and that's like for a home. For something like this, they would probably be even less. So they're they're limited on what they could get from a bank loan, is what you're saying.
That's correct.
It's not going to be enough to do this acquisition.
That's correct. Well. Yes, without getting too much into the strategy behind the types of capital that we're out raising, yes. But then there's also a different, there's the corporate debt from, likes of a co-bank or, name the Farm Credit Bank within your region.
Right.
Then there's also the private credit, which has grown significantly over the past couple of years, which is essentially like private equity, but instead of investing equity, they're investing in debt instruments within a company. So just think a standard private equity firm, but they're giving debt. So it's more streamlined, maybe a little bit better terms, probably priced a little bit higher, but you can get those leverage multiples or just total debt load a little bit higher because the risk profile for private debt is a little greater than your typical commercial banks.
Which now we're talking about funding, we're talking about debt, which I should probably then take this to an opportunity to talk about Harvest Returns, a sponsor here of the business of agriculture. Funding your farm, ranch, or agribusiness does not have to be hard. Your operation is unique. Why should you try to fit a square peg into a round hole with a one-size-fits-all ag credit? We just talked about that with our friend Dan here. Harvest Returns is here to help. They understand that every agribusiness is different. They have a pool of 18,000 investors, and they create creative financing options. Harvest Returns can bring the capital you need to reach your goals. Visit www.harvestreturns.com to learn more about how you can get started with growing your operation today. A little different category, by the way, of debt right there.
Exactly.
Anyway, about your situation here, you see stuff like this, and you say this company takes biomass fodder all over the country, turns it into energy, turns it into feed, turns it into the compost, if you will, for mushroom farming. They've got business, they've got revenue, they've got actual net profit. They have been in business for 25 plus years. So it shouldn't be hard for you to get the money that they need for the acquisition. Where does that money come from? Yeah, are you on the phone with the Illinois Teachers Retirement Fund, or is it 10 rich guys that sit around in tweed jackets at the country club drinking scotch, and then you call them or you go there and meet them at the country club and say, "Hey, Milford, I need a couple $1,000,000 for this." How does this work?
Yeah, well, I think
You
that's
like
probably
the country club idea, don't you?
I do. I do. And unfortunately, I'm not a member of any, but playing golf in the middle of the day, like those corporate bankers, would be really nice.
All right, drinking scotch, tweed jacket at the end of the day, and I just got approached for so. Yes, go ahead.
I think that's a good segue into who invests in businesses like this, right? We mentioned venture capital, we mentioned private equity, private credit, corporate banks. But narrowing that down a little bit more into, okay, within private equity, who invests in the agriculture space? And it's a difficult space to wrap your head around. There's complexities with the farmers. There's significant commodity price risk. So when PE looks at it, and PE as in private equity, looks at agriculture opportunities, it's flashing lights of farmers might have claim in the event of a bankruptcy. There's significant commodity risk both on the input and the output side. So there are private equity firms that specialize within food and agriculture. There's family offices, which is another offshoot of PE, which is essentially just a very wealthy family that invests their own capital into businesses.
Took me until I was almost 50 years old to know what the hell family office meant. I heard people talking about it in the finance racket. Family office to me meant like the corner by the phone where like mom wrote checks to pay bills, and maybe there was a calendar for when you had a dentist appointment. And I didn't realize that there were families with such massive amounts of wealth that they just called it family office, and they sat around and had quarterly meetings as a family and said, where are we going to deploy grandma's money that she's giving to us, and it's $100 million. I had no idea about that until like I was 48 years old.
And there's one right in your neck of the woods in Indiana, Wabash, that is from the Weaver popcorn family that invests in agriculture. So there's
Is that one of your clients?
We have a relationship with them in the sense of showing them opportunities that they can potentially invest in.
Yeah. You get a lot of pitches, don't you?
We do.
And just like I told you, some of the pitches I get people that want to be on this show, some of them are outlandish. Some of them are so outlandish you almost wonder if it's real. You probably get some outlandish pitches. You get some pitches you're like, holy hell, this is a great, how'd this come across my desk?
So, but when you think about pitch, though, it's more oftentimes than not on the venture side. It's a a business that needs significant capital to scale, or it's just, at idea stage. So that's where we see the majority of the pitches. When it comes to,
And that's not you. And that's not, I mean, you, if they come to you, say, this is cool, but this isn't even what we do. And you have somewhere to send them.
I mean, we try to help them just as much as possible. I think, just being within the ag space, there's a shared commonality there and wanting to help people and, be good stewards to the industry. So although it's not necessarily something that we deal with on a day-to-day basis, a lot of these firms that we do have good relationships with have venture capital arms that happy to make introductions to, or just, venture firms that also invest in more mature businesses that put some feelers out there for them. But yeah, you're correct in saying we don't focus on it.
So we promised everybody we were going to tell them where money is going, what's hot, what's not, and I want to get into that next. Before I do, I'm wearing a hat right now. You see it's got a logo on it, and it is Redox's logo. Redox has been a company that's been helping me here with the business of agriculture as a sponsor for almost a year and a half. I've been to their headquarters in Burley, Idaho twice. Really good folks. Darren Moon started his company 31 years ago. He and I have been in business the same amount of time. I started my own business 31 years ago, which means you can trust them. There's a lot of biological companies out here that are really kind of not proven. But you know what? Their bionutrients have a track record, if you will, and a history. Turns out that in 1994, they were working in specialty crop, moved on to turf, and now increasingly in broad acre. So if you are listening to this and you're saying, how can I use biostimulants? Well, I can tell you what you can do. Use biostimulants to accentuate the crop inputs you're already using, spend less money on the traditional inputs, spend a little bit of money over here, and all of a sudden you don't sacrifice yield. In fact, you gain yield and you decrease some of that nasty, harsh chemistry or nasty, harsh synthetic fertility you're using, more importantly, and you actually grow your business. So it's all about charge balance. You can learn more about the Redox lineup of products going to redoxgrows.com. They also have the Redox Grows podcast. I've been a guest on it twice. You can check it out while you're there. Redox, R-E-D-O-X, redoxgrows.com. Go check it out. What's hot? Where's the money going? Where are you getting excited, and where are you saying, oh man, this whole sector is turning off?
Yeah, absolutely. So I'll kind of turn that just a little bit. Now I'll name three different verticals within the food and ag space, and then ask you, what do you think the commonality is there, and why could be considered quote unquote hot. You have pet food, premium dairy ingredients in general, fermented products.
Okay, you're asking me which thing do I think is hot, or are you saying all three of those are hot, and what's the commonality?
That's the latter.
Well, okay, why are they hot? And that was pet food, that was ferment, and your first one?
Premium dairy products.
Why are they hot? I believe even despite, I'm going to throw it out here, even despite the inflation problem we've had now in its fifth year, there's still a consumer that will spend up on what they believe to be something that is superior, better for them, and not mass market processed food. And that could be for either yourself, for gut health, the fermented, for your special dog. In your case, it'd be your pet golden retriever. For me, it'd be my dogs, Jack and Rosa. And then on the premium dairy products, the same thing. It's not just whole red label milk anymore. It's kefir or kefir. I don't even know how to say it. It's a type of yogurt. So those are all, maybe it's the idea that I can spend up to spoil myself. I can spend up to make my health better. I can spend up to have something that is different than commodity grade, both for me and my dog. I think that's, if you said that's the vertical, why are they there? I think I've given a lot of the reasons. Am I reading the marketplace correctly?
You're reading the marketplace correctly. It's going back to what does private equity look for in a business? Margin expansion potential, growth potential, the pricing power, product differentiation, value add. So with those businesses that we just talked about a little bit, they have a commodity exposure, but the commodity exposure is on the front end. They're taking it from the input side, but the pricing power of those businesses allows them to move their sale price up and down dependent on the marketplace. Whereas if you're looking at more of traditional agriculture, what people, especially in the Midwest, think about traditional agriculture, grain elevators or fertilizer facilities. They have that commodity exposure both on the input and the output side. So the opportunity to expand margins isn't necessarily there. And your pricing power is really determined by the marketplace. So
By the way, I love it. You rattled it off very quickly. And this is, again, we talk about the vernacular. You said, what does private equity want? Meaning to make money, if you want to make money on your investment. You said margin expansion, growth potential, pricing power, differentiation, and value added. These are things that, if you obviously you listen to my show, I've been telling my audience for like 20 years. I said, the better ag in America does about getting out of commodity mindset and into differentiation mindset, the better off we'll be for those very reasons. Number two, yellow corn is great. We're good at making it, and you're Champaign, Illinois, where you went to school. You can fling corn out the window of your truck driving by and get 200 bushel corn without even trying. Good. But the problem is no pricing power, no differentiation. They obviously commoditized the stuff, and you're a price taker, no pricing power whatsoever. So that's what you're talking about. You're now talking about the next phase of agriculture. You're talking about uncommoditizing agriculture and food.
And what's a great case study of that would probably be Fairlife, correct? You have your standard, you have a category in fluid milk that has been decreasing on a per capita basis since the 1950s. Mm-hmm. And what does a group of farmers do? They create a product that is higher in protein, removes the lactose, and sells to Coca-Cola for an undisclosed amount, but a significant amount of capital.
So last time I dug into it, there was about 6 years ago, Dan, that the Coca-Cola people said, we expect Fairlife to be our next billion-dollar brand, meaning $1 billion of sales. I don't know if they've achieved that yet or not, but it was about 5 years ago when I looked into this. And what does Fairlife do? They took regular old milk, and again, uses a loss leader at grocery stores across America, and they differentiated it, and they value added it, and they created pricing power by doing so because now it's a brand. And then that other thing you talked about, growth potential. We know that fluid milk, I still drink my chocolate milk every day. You saw me. That's how we started our call. I was having my chocolate milk, whole chocolate milk. But we went from 48 gallons, 47 gallons of fluid milk consumption in after World War II to about 1/3 of that. I think we're around 16 to 17 gallons of fluid milk consumption per American per year now. So you're talking about growth potential. There ain't no growth potential in something that we're consuming 1/3 less of a couple generations later.
But if you eat 1 pound of cheese, that's 10 pounds of milk. So as a whole, you have dairy expanding, but the fluid milk portion is definitely deteriorating.
Last I looked, I think, Dan, that last I looked, I think we eat something like 5 times the amount of cheese today as we did when I was born in 1969. I mean, you probably have a number on that also. But yeah, so cheese has been great for dairy because it takes a hell of a lot of milk cooked down to make the cheese. So good point.
Exactly.
And also, why is it? Value add.
Yep.
And what's cheese? And we talk about premium dairy. So just in those spaces that you said, let's go to that, where the investment trends are. Do you have a premium dairy brand or processor that then is saying, hey, Dan, find us some money because we're growing like gangbusters and we need to expand?
There's several opportunities in the market, more on the sell side right now, that is separated from the farmer, meaning they don't take in milk from the dairy farm, but instead purchase it from a co-op, turn that into a premium cheese, and then sell it either as a brand or through the food service or in industrial channels. Mm-hmm. That's specifically the space that is garnering, I think, the most interest from financial buyers, at least. I mean, then there's a whole separate appetite or interest in trends to, outside of the financial buyer being PE, in strategics. And strategics, like, what are they looking at? And strategics being large agriculture businesses. And it's the same trend that I think has permeated the ag space for decades now, and that's consolidation.
Okay, before we get into consolidation, I want to do one more thing about specialization, which is where we were before. We talked about premium dairy, and then you went to pet and fermented. I had the country's biggest sauerkraut company on here in one of my past episodes just about a couple of months ago, and they thought same thing. They kind of bought up and bought into. I don't know if they used a company like yours to advise on raising capital to do so, but it was Fermented Food Holdings, by the way, is the name of the company, and they moved their headquarters to Wisconsin because that's where a bunch of cabbage gets produced. I think Wisconsin, New York State, and Ohio State. I think Ohio are like the three biggest cabbage states, I believe. They were talking about this growth category. Where else is there besides sauerkraut that someone says we need money and you think you can help them out? Is there somewhere else that I'm missing?
I think just in general, broad strokes, waste to value is a good buzzword, but also has proved to generate returns. Sticking within the dairy space, think of, as you mentioned, the significant increase in cheese. Well, how do you make cheese? You have milk, and it curds, and the curds float to the top. What floats to the bottom? Whey. So whey powder, think in your protein drinks.
Yep.
But for, I don't know, maybe call it 30 years ago, that whey was just washed down the sink. There was no use for it, and finding a use for that has proved to be extremely profitable for several companies. One in particular,
The popularity of protein, almost you could take the popularity, you talk about premium dairy and fermentation, you could almost take like a little dangler off the bottom of both those and say the popularity of protein is almost walking down the same aisle as those two products, those two categories.
yep, better for you, right? Fermentation, high protein. I mean, even fats, premium butter, for example, yeah, from a grass-fed cow. They think of Kerrygold. That was a brand you probably hadn't seen in your stores 10 years ago, but can find it in pretty much every Costco or grocery store.
And by the way, Dan, this is what I love this discussion because I want to motivate the people. And I know that there's a limited. In other words, not every consumer is going to eat Kerrygold or organic kefir or whatever. But it's a growth. These are all growth categories, which is why money is coming into it. By the way, a Wall Street Journal cover story in the weekend edition had a big picture of butter, and it wasn't safe. It wasn't Safeway brand butter, and it wasn't even Land O'Lakes, which is what we used to think premium butter was. It was the very thing you're talking about, how butter got better. And that's this exact thing that now this is this new indulgence category, and it's a growth category.
Exactly. And probably the little secret is the difference. It's still a commodity at the end of the day, right? So in the U.S., you have butter; it's 80% fat. Over in Europe, and that Kerrygold, I believe, is 84% fat. So it's just slightly different texture and a little bit more fat, as well as slightly different diet. But even that small little change is
Diet for the cow, you mean?
correct. Correct.
To make
Yeah.
the butter, right?
Even that small little change, that 2% difference in fat and a grass-fed diet, changes the product from just your standard commodity butter into this now premium category that, because the cow is eating grass, that color of the butter is going to be slightly different than, like you mentioned, a land
Without artificial colors.
Yeah, exactly.
And by the way, I'm glad dairy finally is hopping on this because we saw it with ice cream 30 years ago. When I had growing up eating Marsh brand ice cream because I loved ice cream, and then all of a sudden I had like Haagen-Dazs or Ben and Jerry's or Creamstone out here or whatever, and I'm like, oh my god, oh my god, this is amazing. And so now we're there with butter and yogurt presumably as well.
Yeah, exactly.
Last thing on that pet spending continues to grow. There was more pets adopted during the COVID thing. We didn't have companies like Farmer's Dog or Chewy, etc. Are you helping companies in the pet space?
Yeah, I mean, when you think about pet food, it's similar to the waste to value type proposition, right? You're taking a low value commodity, even byproducts, at times, and you're turning that into a premium product. So that's
Chicken innards become grain-free, high-end, high-protein dog food that you can't even buy at TSC. You got to buy it at
Exactly.
a pet specialty store.
Exactly. And another good case study, is this is a private equity owned, or at least at one point in time was a private equity owned company, is True Green, right? What does True Green do? They buy commodity fertilizer and they sell it to you and I at 10x what they purchased it
Yeah.
for.
And they have pretty trucks that come around and spray your yard with a bunch of nasty stuff that the very people in the suburbs think we shouldn't put on our fields to grow food. They're spraying on their yard so that their yard looks better than the neighbors.
Right. They don't want to eat it, but they'll roll around in it with their kids and dogs.
Okay, so that's where you said private equity likes those things: premium dairy, pet food, and fermentation. You just gave three examples that are essentially that meet those criteria of margin expansion, growth potential. They have pricing power. They have pricing power because they have differentiation and also value added because they have a brand. Kerrygold is a great example of an answer. Then you said strategic. Private equity is going into, and that's the old thing of consolidation. Usually not huge returns unless you can just knock a couple $1 million of unnecessary expense out. Am I right? That's how that game is played?
Yeah, exactly. So, a strategic acquiring another strategic. So, more recently, there's been uh, CHS and the West Central Ag Services
Yep.
merger, Anderson Skyland, which we advised on, or more recently, Atterbury Grain and Heartland Co-op. Those would be, strategic transactions that there's a strategic value for the buyer, meaning they can buy more, buy at a higher price than what a financial buyer would. Financial being a private equity firm or a private
Mhm.
or a family office.
Um, from there, is there anything else that's you saying that that's still a trend that there's strategic, which tends to be our company and this company have so much in common. We're going to create economies of scale by merging or, us buying them, whether it's a merger or just an outright purchase or whatever. And again, that's a lot of times looks like consolidation and then it just becomes, which is commoditization as well. It's
Mm-hmm.
just a matter of knocking out expense and creating economies of scale. So we went from premium and trendy to strategic. Is there another area that's hot or is that it?
I think automation is always going to be trying to drive efficiencies, especially with potential impacts on labor in the U.S. and in the ag space. But that's been a trend that might just be accelerated.
Mhm.
Genetics is also another big one too, both on the crop input side of things as well as in animals. Um,
Those evil people making Franken food by breeding tomatoes to salmons, and you're out here facilitating it, Dan. You should feel bad. Your 4 week old child will be eating Franken food. You should feel
oh
bad about
no.
that. By the way, poor kid from the South Side of Chicago, as you were just happy to have food. You didn't give a damn if it was a tomato bred to a salmon. You just were happy to have it, right?
Exactly. I wasn't told the difference.
Where's not hot? What is absolutely fizzled? I think that you're going to tell me, and I want to lead it off with my favorite one: contained environment agriculture. Honest to goodness, 5 years ago, dear listener and viewer, and I hope you are a viewer. If you aren't, go to my YouTube channel and click subscribe because we're creating some really good videos, both this show and all my ag commentary. We were told we were never going to have fields. We're never going to grow lettuce in Yuma, Arizona ever again. We're just going to grow it all in a big, huge building outside of Cleveland. And I thought, well, that'd be neat, but I'm not sure I see the numbers working. Turns out my hunch was right. And you're going to back me up as the intelligent investment advisor guy. I'm sorry, boutique investment guy you are. What happened to contained environment agriculture?
Yeah, I think you described it quite well. There's been an influx of bankruptcies over the past several years. You had well over $10 billion invested in the space, and a lot of that has made its way into bankruptcy. But there's the controlled environment agriculture is a big one, but then also alternative proteins. Beyond meat, for example, non meat meat, and even non dairy products. Right? You can't. The old adage, you can't milk an almond.
Yeah.
I love saying that one. But those, I think the consumer has um, been educated in the sense that it's a contradiction to want something that's organic, but then have a burger that was once a soybean.
Yeah. So what? First off, apologies, listener. I said contained environment agriculture. It is contained, but it's controlled is the proper word. So I apologize. Thanks to Dan Zelazik for being the guy that corrected me without correcting me. By the way, you can correct me. I've been with the same woman for 29 years. I take correction well. Um, Beyond Meat, and just spoke to a meat group about 2 weeks ago, and I did a little digging on this. At the peak, when it was all hot and we had the Leonardo DiCaprios and Bill Gates telling us that if we didn't eat Beyond Burgers, we were going to kill the environment, which is all bullshit, all completely made up about, the climate crisis is because of cows and cow burps, completely made up, completely, absolutely no basis in fact, etc. $377 billion was the market capitalization, which means the value for you non-financial listeners. That's what allegedly Beyond Meat, if you took their stock price times the Beyond Meat was allegedly a $377 billion company, meaning that's what it was worth. It's if you were to somehow buy it. Today, me and Dan could probably raise them. Me and Dan might have enough money just laying around to buy it. I think I looked at the value of Beyond Meat today. The market capitalization is like 220 to $290 million. So it's like 6% of what it once was. Am I right about that?
No, you're absolutely right. They ran into a wall that they couldn't penetrate the market beyond whatever it was. If the market penetration was 5% of total meat sales, they've quickly realized that there wasn't going to be a mass change in consumer taste and preferences that is going to adopt the non-meat meat.
Yeah, and like you said, I've questioned it even in 2018 when it was the big hoopla, and they got boatloads of paid for and free media promotion. And I said, I don't know that the customer keeps saying, I want to know where my food comes from. I want natural. I want organic. I don't know if they're going to switch over to beet pulp mixed with some coloring and then packaged in a factory and thrown in some plastic. I don't know that this is, I think there's a disconnect in spite of all the media and the PR that Bill Gates and his crowd were able to push out there. It didn't get adopted.
No. Yeah, that's absolutely correct. I mean, and it's the same thing with the controlled environment agriculture as well. I mean, are you going to be paying twice as much for your vegetable that's grown in a greenhouse versus one that's grown in a field? And I think a lot of those companies that have since folded came to that conclusion that the consumer is just not willing to pay that higher price for something that's grown in a greenhouse.
Yeah, and on the meat, it wasn't even really about the money. At one point, Beyond Burger wasn't necessarily priced prohibitively to regular meat. I think there was an ick factor. And what dawned on me, Dan, 5 years ago, when there was a run on groceries and people were hoarding toilet paper, I went to the grocery store and the meat counter was bare. but the Beyond Meat, fake meat, was there. And that's when it dawned on me. I said, even when people are literally fighting in the parking lot over toilet paper and there's fear that they might starve, they don't want to buy this crap. That should be all you need right there to know.
Yeah. And you've seen that the exact opposite of the adoption of plant-based meat to more meat-based products. Tallow, for example,
Yeah.
is huge now, or is gaining popularity.
Do you have any play there? Do you have any? Because RFK Jr. started, I don't think the average consumer even knew what beef tallow was, but he mentioned it like at every speech that he gave and then talked about the evils of seed oils. And we need beef tallow. And by golly, a certain category of people are going to Steak and Shake now because the French fries are fried in beef tallow. Can you guys make money on this? Can you help some clients make some money on this?
I have a close family member that sells the beef tallow into various retail channels. So there is a little bit of a tie in there. And just chatting with him and sharing notes, there's been a significant uptick in sales volume recently.
Anything else that's not hot right now? You said controlled environment agriculture and fake meat, obviously, there's no funding going to that. Do you have any of your clients that are coming to you saying, we gave you money 5 years ago for this area. Get us the hell out of it because it's so not hot. Is that kind of a thing that you spin us out of this because we think this was a mistake?
So I think a better way to position it is not necessarily not hot as much as there's a pause on investment until further clarity, until there's more clarity in the marketplace, and that's in the sustainability slash carbon reduction space. You're seeing even the wording changing away from sustainability, sustainable aviation fluid to synthetic aviation fluid. Just a slight change in phrasing to try to garner a little bit more interest there. But a lot of those initiatives were funded by the Inflation Reduction Act in the previous administration, and there's additional clarity that needs to be had with the new administration on the feasibility of these projects.
Yeah, and so a pause on it means if someone says we're gonna build this facility or modify this ethanol plant to make sustainable aviation fuel, you think it's gonna have a hard time doing the getting money?
Yes, as long as it pencils out, right? It's just a recalibrating of returns and a recalibrating of capital needs. So if the government was going to fund X% of the project, having to go out and find that additional source of capital, and you're dealing with a finite group of firms that have appetite in that space. So letting the dust settle and trying to figure that out.
Couple last questions about your investors and then where you're advising them, because you're an advisory group. You're not the money, you're the advisory group to bring capital to food and beverage and agriculture that is looking for expansion. I can put money into money market. I think it's at 4.6% or something. And there's essentially no risk. We know what's going on with the stock market. You and I are recording this mid-April, so depending on when you're listening to this, we've gone through a lot of tumult in the last 2 weeks since the whole tariff and Liberation Day, et cetera. But if safe money's 4.6%, mortgage rates, I guess if I could put into some kind of a one of those deals in what, 6.5, 7.5, 7, let's call it 7.5%. What do your people want? What do they expect to be a return in private equity?
Yeah, for the most part, just rule of thumb, I think across the across private equity is a 20% IRR. So their time horizon is anywhere from 5 to 7 years, and on an annual basis, expect a return of 20%, and that could be achieved through dividends, through recaps, meaning taking cash out of the business. And then ultimately selling after that 5 to 7 year hold period.
And 20% internal rate of return, meaning I don't necessarily get 20% given to me, but it stays within the investment.
Correct. Yeah, until the end or until a dividend is paid at a future date after.
Their expectation is 20%. And then is it hard to get money right now? It seems to me there was money sloshing around a couple of years ago looking for a home, looking for somewhere to invest. And it seems like my perception, it's a little tighter now. There's not as much money sloshing around, but still a lot of money sloshing around. But I don't do what you do every day. What's the real picture look like from your seat?
Yeah, I think a lot of it depends on what stage of the business life cycle you're in. If you're more on the venture side of things, you're more early stage, you're pre-revenue or just an idea, that money has certainly tightened up significantly. I think just within the ag tech space, for example, you saw total fundings for calendar year, I believe it was 2022 or 2021, peaked at 50 billion. And last year it was down to 15. So significant reduction in capital going within the venture ag space. But for more mature businesses, if you have a good business with consistent margins, the capital is still there for good, strong businesses, and even for businesses that are struggling. I mean, there's opportunities for exits. There's opportunities to restructure, and that's a lot of the work that we do as well, working in those types of situations.
So there's still plenty there, and it looks to me like ag tech is definitely not as hot of a place where money's pouring into, but you're saying there's still plenty of money there for the kind of clients you work with, which again they've been around for a little while and have a track record.
That's correct. It might not be as advantageous terms as it was several years ago, but the capital is certainly still there, and there's plenty of private equity firms with dry powder that's looking to deploy capital.
Last question. I said investment trends in 2025. Take me 5 years from now. You're a young man. You've got a history. You've been with Rabobank. You've been with StoneX. And now you're with Ascendant Partners. Where are you advising? Where does the puck go 5 years from now? What's hot 5 years from now in agriculture?
I think I think product differentiation at the ethanol facility has significant upside potential.
Ooh, I think we like that right there. Is that because of the aviation thing or because of the environmental push? Which thing?
Yeah, I mean, there's a lot of different avenues that an ethanol facility can take. If it's renewable natural gas, if it's carbon sequestration, which is reliant on tax credits, but it's even using carbon as a feedstock to make different biofuels. I think there's significant opportunity there, and any potential advancements in technology to lower that barrier of entry has the opportunity to significantly impact the ethanol space, and therefore, for the majority of Midwest farmers.
As long as we keep the renewable fuel standard, which is at age 20 right now, and it probably will stay there.
That's what I thought too. But one of my old professors, Scott Irwin, I think has a different opinion on that. He was doing an outlook a few months back on ethanol and biofuels, and he made a pretty bold claim, or I thought was bold at the time, that if the renewable fuel standard was revoked today, that you would not see a significant drop off in ethanol demand, which I thought was very surprising. But
I'll tell you what, that's a subject for another episode, but that means it stands alone. 195 ethanol plants, I think there are in the United States right now, and he says that not a one of them would close even if we lost the renewable fuel standard. And our friend Dan Zelazik says the puck is moving. If he's going to go 5 years down the road and talk about investments in agriculture, might be in that ethanol space. He told you what was hot: premium products for dairy, pet, fermentation, because all of a sudden we're talking about where you can get bigger margin, growth potential, pricing power, differentiation, value add. He says what's not hot: controlled environment agriculture and protein replacement. Why? Because they kind of repulsed the customer. Also automation, genetics, and obviously strategic, which is consolidation. His name is Dan Zelazik. The company's called Ascendant Partners, Inc. If they want to find you, where do they find you?
You can go on our website. We have our contact information there, and feel free to reach out. Always happy to have conversations with people in the industry and provide any value where I can.
We're also connected on LinkedIn. You can find him there. His name's Dan Zelazik. Thank you for being here at Ascendant Partners. Go to Ascendant Partners website and find out how you can get a hold of him if you've got a great idea, if you need expansion money, or you have money to deploy. Thanks for being here, my friend.
Thank you as well.
I love the topic. I love the topic. Anyway, thanks for being here. If you enjoyed this, remember to thank my sponsors, Harvest Returns, Newfields Ag, and Redox. Go to all their websites and see how they can help you with your agribusiness operation. If you enjoyed this show, you'll also enjoy my show, The Granary. Started filming it last year and released it starting in January. It comes out every week with my friends at XtremeAg. We hang out at my on-farm tavern in Indiana, and we talk about all things agricultural, the personal and the professional. You can pull up a chair and join us. So next time, thanks for being here. My name is Damian Mason. This is The Business of Agriculture. Hey, sincere thanks for joining us here on another episode of The Business of Agriculture. I want to ask you, if you farm, are you looking for more productive efficiencies to grow higher yielding, better performing crops? Well, of course you are. Newfields Ag provides a complete portfolio of biological products focused on you, the farmer. If you want to learn more about the Newfields Ag product lineup, go to newfieldsag.com for information.